Everybody's worried about the crash. Everybody's worried about Trump's tariffs. But actually, if you are a crypto investor, you don't have as much to worry as you actually think. And in this video, that's exactly what we're going to be covering because I think Bitcoin is looking incredibly bullish. I mean, can you imagine? In the past 24 hours, the S&P 500 is down. The last time I checked, 4%, but it looks like it's probably even more. And when you look at oil and when you look at gold, they are down also 2% and 9% respectively. And actually, Bitcoin is now up around 1% when you look at the past 24 hours, which is insane. So I want to talk about why I think Bitcoin is bullish and why I feel that Bitcoin is actually going to find a bottoming very soon. And in the next 1 month, we should be seeing a step back into the 100K range and then eventually to brand new all-time highs because of one specific indicator. But guys, if you do think that this is an interesting video and if you find what you would like to watch, I mean, if you find what you're watching interesting and helpful, then make sure to destroy the like button and subscribe to become a crypto kid because, guys, we're so close to hitting 50,000 subscribers. We're just 1,900 subscribers away, and I think we can do it. So subscribe, leave a like, and with that said, let's get straight into the price of Bitcoin. So today, we had a couple of things happening. We had Fed Chair Powell speaking following the vigorous drop on the S&P 500 after Trump signed executive orders to initiate reciprocal tariffs on 25 different countries. You can see that this was the point of which the executive order was signed. We streamed it over on the Moonshow channel, and basically since then, over the past 2 days, the market went down maximum 10%. So far, it is down 9.4%, and it's continuing to dip every single second that I continue to speak. The S&P is looking concerning. If you've been a watcher of this channel, we spoke about how since November of 2023, the S&P has been in a massive uptrend, but we faced the consolidation period with a double top, and a breakdown from here was just one of the largest signs of a reversal of pattern, a reversal of trend, and that we would likely continuing hitting lower levels. And guys, we spoke about a very important level, which was where Bitcoin, or in fact the S&P 500 went to over in August of 2024 on the day of the Japanese yen carry trade. That was another very spooky time for the market. In fact, the fear in the market, as you can see on the volatility index, the VIX, it went to an astronomical number of 65. Today, we're very close to that level. The fear in the market is also insane. And that was like a 15% drop over on the S&P 500 and in fact, 9% drop on the S&P over just a couple of weeks' time. This time around, the drop has been more extensive and it's taken longer to happen, meaning that this is not just a, like a drop and then black swan event and sharp recovery to the upside. No, this is a bit more of a concerning thing. So here we can see that the S&P last year in August of 2024 went down to around 5,141, saw that bounce and continued in its bull cycle. But the issue is, I mean, if the S&P next week after the weekend continues dipping below this wick here of 5,125, then technically you would be entering into a macro bearish trend. I mean, now you're still hanging on for dear life. There's a potential for a bounce, and then maybe you create a head and shoulders pattern, and then you continue breaking down. But it doesn't look too promising for the S&P, given the fact that if we break below this low here, then you're creating a confirmed bearish trend, which would mean further lows for the S&P, at least in this year. Analysts and geniuses in the economics world are saying that there is now a 65% chance for a recession to be happening. And personally, I think that tariffs are amazing for America. It's going to cause domestic goods and make America dependent on its own economy and not dependent on external economies. However, the implementation has to be done very carefully because, look, corporations are greedy when they do have these tariff situations, and when they even make American products within the US, they're going to increase prices and put it onto the consumer and just say, you know what, we're increasing prices because of tariffs. But no, they're going to be greedy. I saw a tweet, somebody saying that I can't wait for my $10,000 iPhone that's made in the US. So I'm not exactly sure if it's going to turn out as expected. There is around $7 trillion of foreign direct investment coming into America, but to take that capital and turn it into factories and turn it into automaker jobs and jobs within the US is just going to be super, super difficult. So I'm not exactly sure if it's going to work out. There's so many American companies too internally that have so many employees outside of the US, have manufacturing stations outside of the US. They import goods into the US. And obviously one of those companies is Nike. They are falling hard today. So it's just, I'm not sure what to say. It is a bit of an interesting situation, and hopefully in the long term, it will be working out, but it does mean a short-term downfall for the markets until that reversal point happens. And for Bitcoin specifically, it's okay because Bitcoin doesn't produce any goods and services that have to be imported and exported from and into the US. So the economic, the economic exertion of tariffs doesn't really impact Bitcoin in any sort of direct way. It's a commodity, it's a store of value. So there are no tariffs on Bitcoin. That is why Bitcoin is not seeing an extensive enough decline like the rest of the markets. So that's why Bitcoin is now being considered as an incredible hedge against uncertainty. Institutions are waking up, corporations are waking up, hedge funds are waking up. They're understanding that this thing is not a risk-on asset. The S&P is back down to where it was back in August of 2024, but Bitcoin is still up 67% since August of last year. Let that sink in. So today, hedge funds are understanding that, you know what, Bitcoin is an asset that we have to have in our portfolios regardless of what is happening, because in fact, it's a risk-off asset. It's a bit volatile. It can do some crazy things, but it's because it's young, it's a teenager. So I think a lot of corporations and portfolio managers today are understanding that Bitcoin is an incredible diversifying asset. In fact, Scott Bessent, the Treasury Secretary, literally half an hour ago said that Bitcoin is becoming a store of value, comparing it to gold, which is incredibly bullish. And that is why I'm adding to my long position, guys and girls. I'm going to be adding literally to my long position now again. As I said, I'll be dollar cost averaging into this position as time continues. So let's add just to show you how it's done. 200 USDT, confirm, and there you go. It's going to be added to my position here over on weeks. In fact, it's going to be creating a separate position, and I think I can merge that into one position later on. But guys, if you want to be trading Bitcoin or cryptocurrencies, please make sure to go to the links down in the description of today's video and sign up to weeks if you want to trade globally, regardless of your geographical location. The link down below to weeks is right here if you want to buy and trade cryptocurrencies. If you want to buy crypto for the first time with fiat, then Bybit is the place to do it. If you want to buy this dip, I would definitely recommend doing so. You can see that retail investors bought $4.7 billion worth in stocks yesterday, the highest amount of purchase of buy the dip in the past 10 years. And guys, whenever the VIX goes up, whenever there is fear in the market, it is always a good time to be buying. So that is basically what I wanted to cover on today's video, that Bitcoin is decoupling from traditional instruments of finance, and we're going to go up massively in the long term. I think there's going to be 1 month of consolidation, because if you look at the global liquidity, there is now a consolidation period. We've been following it basically exactly textbook, and we even saw that pump short term to the upside. Now a drop again. I think we're going to fluctuate between $76,000 to $83,000 until the end of May, or in fact until the end of April. First week of May, we start pumping again with the United States adding Bitcoin to its strategic reserve, and then boom, we should be going to brand new all-time highs. That's why it's a good time, in my opinion, to be adding as much to long-term, low-leverage Bitcoin, dollar cost averaging positions as much as possible. So with that said, that's basically the roundup for today. We also got some economic data coming out, just a couple of hours ago. We covered it live on the Moon Show. We got the non-farm employment change. It is a big change. We went from 137,000 jobs to over 220,000 jobs. That's a massive good push up in the labor market. And today, Fed Chair Powell spoke, and he basically said that, you know what, we don't want to rush into quantitative easing. We don't want to be cutting rates. Obviously, these tariffs are going to be creating inflation like crazy. So I wouldn't be expecting massive quantitative easing coming up anytime soon. So I think altcoin season will be pushed towards the end of this year, and Bitcoin will just be following global liquidity. And after 1 month of consolidation, I think we can continue running further towards the upside. So guys, if you enjoyed that video, again, destroy the like button. Thank you so much for watching, and have a great weekend, everyone. So guys, thank you so much for watching, and as always, bye bye.